Hello, everybody. Welcome back to another episode of the Market Close. We are here ending out the week, Friday, April 11th. And folks, we needed something to happen today in order to go green. We really needed a few things to line up together and essentially take place in order for us to get away from the choppiness of the morning, which was red, green, red, green, red, green. We got it. We got it. Not a full-on pivot, but we got it. And I'm going to talk about what happened in a second. But before that, S&P 500 up 2%. I don't want to get too excited. Obviously, we've seen what has happened over the past couple weeks. This thing could go back down 3-4% on Monday. I mean, we have no idea what's going to happen. But we did get some updates today that we'll talk about in a second, which seems rather bullish. Bitcoin, 83,000 right now. AMD is up 5%. The Qs are up 2% on the day. NVIDIA, 110.39. That's green, 2.6%. Mercado Libre, 3%. Nubank, 2%. Robinhood is up a whopping 7.2% on the day. Mani-pedi part 2. Yeah, like I got the manicure now. I think I can afford the pedicure. But just an incredible day. And this pivot really happened about an hour after the market opened. And as soon as I saw stocks start going up, I had a feeling like something had to be said. And something was said. And that's why we are green. And in about 13 minutes, I think, hopefully, it seems like we got enough momentum, if anything happens in the next 13 minutes, that we will close green, which would be an epic end to a week that saw the S&P 500 reach 2022 levels and ultimately come back about 8% after a core couple of pivots. And not only are we seeing the stock market go green, we're actually seeing yields come down. I know the 10-year is still technically up for the day, but it is substantially down from where it was in the morning at about 4.537 at the highs. And then the 30-year actually is going red for the day, which is great. That means people are buying bonds. That means yields are coming down. Who are necessarily buying the bonds? We don't have the answers to those questions yet, but it does mean there is a little bit more confidence in the bond market. I mean, to be honest, market participants, hedge funds, they could be buying bonds based on the pivot that we got today, which is not a big pivot, but it's enough to get the market to go green 2% on the day. And that is what gives me confidence that we still have a possibility of a bull market this year. Because if the market's willing to go green on what you're looking at on the screen, these two sentences right here, which is the White House confirming to the media that Besant is keeping an eye on the treasury markets. And number two, we have more than 15 trade offers on the table from other countries. That was the exact quote from the White House. Boom. That's all you need. That's all you needed, baby. That's it. And this is pretty much what we were talking about in the morning, which is that, look, I know it looks scary, it looks gloomy, it looks bad, yields are going up, but one tweet, one word of negotiations going good could change this entire dynamic that we're seeing right now. Now, granted, markets could wake up on Monday and say, you know what, we don't think 15 trade offers are enough. You know what, we don't really think Besant knows what he's doing, and then just start tanking again, and then yields go up. So we can go through this whole game again. But the reasoning behind some of the magic we're seeing right here in terms of the pivot is because of the potential of these trade offers. Now, there's one more thing that did happen today, which probably is why we're going green, but it could also be a reason we're not going green. One of the Fed officials right here said this right here: Federal Reserve absolutely ready to help stabilize market if needed. This is one of the top officials that said this morning. So that headline came out, as you can see right there, at about 1:40 p.m. That's also when the market started pivoting. Now, the reason I say this is part of the reason is because we had other Fed officials today, like Kashkari and Waller, say that, no, we're not going to come do quantitative easing. They didn't literally say that, but they kind of, it was obviously very implied in terms of if you read between the lines, they were like, hey, we don't think there's enough uncertainties for the Fed to come in and start quantitative easing. So from that perspective, I do think this, along with the Besant commentary and the 15 trade offers on the table, when you put all three of those together, they all pretty much dropped from like 1:40 p.m. to 2 p.m. Eastern. That's when the market started pivoting. And that's all this market needed. That's it. That's all you needed to be able to make this argument to go green today, which is pretty incredible. And what it tells me more than anything, and again, we could see a total reversal on Monday, but what it tells me is that this market is not only fragile, it wants to go higher if you give it the right ingredients. And the earnings ingredient, I believe, will be there, because I think earnings in Q1 are definitely going to be good. And I have some evidence for this finally. I don't have to just assume this. The banks, JP Morgan, BlackRock, Morgan Stanley, all of them crushed. JP Morgan up 5% on the day. Big day for JP Morgan. BlackRock up 3%. Wells Fargo basically covered its losses. It's flat on the day. And then Morgan Stanley right here up 1.92%. If earnings continue to be good and inflation continues to go down, again, PPI this morning was phenomenal. First negative read on the core for the monthly and for the headline in over 2 years. Then all the markets need is Trump to just like give us some clarity on these tariffs, maybe take down the 10% to 5%, just something. And I think we have a real shot to go higher. And the market's kind of proving that to you currently right now. So I'm not saying we're out of the woods. I'm not saying like this is going to be super easy. I'm not saying we're done. Obviously, there's a lot of issues still going on in this market. Again, this euphoric feeling we had 2 days ago. Then we woke up Thursday morning and the market said, yeah, we kind of just don't care about this anymore. So all of that stuff is still there. My point is just enough of cooperation from the White House, given how oversold we are. VIX being over 50 for the past 2 days. VIX is now down for the day. That could be enough to get stocks to go higher. The VIX right here falling 8.52% after it was up about 11% on the day. So we're not out of the woods, but it is encouraging to see the market turn off very simple announcements right here. And it looks like we're going to end green for the week, which is not too bad. 3 moves I did today. First of all, I got kind of lucky on the Hood and NVIDIA covered calls. I rolled them literally right before they took off. So I rolled the Hood covered calls, which would be underwater. They were at 42. I rolled them to 47 for next week. And I did that for a credit, which means I didn't have to actually pay a debit to be able to get there. So I got to 47 for next week and I got a net credit. And then on NVIDIA, I rolled for a net credit from 110 to 119 for next week. These might have been challenged, might have not, but like about an hour ago, I realized I just didn't want to worry about it anymore. And so I rolled it as well. At one point, I think NVIDIA got closer to 113. So it was, it was getting more expensive to do it. So yeah, got to roll those really quick before I didn't see Hood going up 7% today, to be honest. Because I didn't think we would get, well, I did say in the morning, I think we would get some announcement from Trump. We didn't get it from Trump. We got it from Basent and we got it from the White House officials that we got deals on the table. So we got enough of a little bit of a pivot to get the bond market to calm down, which again, my whole point in the morning open was just like yields keep going up. The White House is going to have to say something. And they said literally the slightest thing and the markets pivoted, which is incredible. So there were, I made those 2 moves today and then I bought TLT. So I kind of convinced myself in the morning as we were talking about it. I bought 15 LEAP contracts, January 2026, $100 calls. Paid, I think, average $205 for them. So yeah, I think it's about like $2,500 or $3,500. And hopefully yields come down. My assumption right here is that yields are topping. The 10-year right here, 4.474. The 30-year, 4.857. Do I think I got the absolute bottom because yields could go higher? No, I think yields could go higher. But when you put the pieces of the puzzle together, I do think at some point these yields will come down. And if they do, TLT hopefully should do well. So that's what I did with TLT. Tom Lee, he's live. Let's see what he's got to say. And then we will get into this market close.
That's managing partner, head of research, also a CNBC contributor with me here at Post 9. Thank you for being here. So, Liberation Day didn't go as you thought, and you apologized publicly for that, which I think a lot of people appreciated. You're always a stand-up person about that. What now? Where are we going?
Well, I think a couple of things that we're thinking about is we know markets have gotten very pessimistic. They've priced in a 60% probability of a recession. And if tariff negotiations de-escalate, then the probability isn't that high. So I think that there's still a big window for markets to have a large rebound, but it's really the path of this de-escalation.
Are we in a bear market? I mean, we're in a bear market, right? I mean, it almost doesn't matter, textbook whether you say we are or not. It's like so many stocks got just absolutely destroyed before this uncertainty happened in the market.
Yes. I mean, if we define a bear market as stocks feel like a grind or you're losing money, I'd say it really started in December because markets were churning even through the February high. But if I was to define a bear market as unleashing a type of financial tightening that leads to a recession, we're not at that criteria yet. But I think it feels like a bear market for the average person.
Are we supposed to buy into that or just stay cautious and on the sidelines, don't do anything, sit on our hands? I don't think people know what to do. And I'm not just talking in the CEO suites because they obviously don't know what to do. How can you? So what is the investor supposed to do? Yeah,
I mean, I think there's sort of two brains people are fighting. One is the tactical brain, which is, look, they want to know if this is a bottom, and they want to be convinced of it by seeing stocks rally on bad news. But if someone had the investor hat on, and that's the long-term brain. I have a lot of confidence the U.S. companies are going to navigate through this treachery. Stocks are hugely oversold because you never really lose money buying the VIX at 50, or when the percentage of stocks above the 200-day drops to 15. Those are almost guarantees of positive 1-year, 3-year, 5-year returns. So
he's right about that just from a historical perspective. Like when you tend to buy stocks under those two conditions, you tend to get a 1, 3, 5-year positive return.
It depends which brain you're wearing today, but I'd say the majority of our clients are trying to be tactical.
I hear views of, well, it's really hard to get uber bearish now because a headline at any moment, as I said in the open here, the market is waiting so hard for some bit of good news that if you're on the wrong side of that, you get a day like you had on Wednesday.
Yes.
And technically a day like today, right? Which is the incredible part of this. If you are long and strong, that's not to say you're out of the woods, but any little pivot is enough if you've got inflation coming down and earnings projected to be good, which the banks kind of proved that today. Again, that doesn't mean we're out of the woods, but it does mean the market can turn on a dime. And then when we actually get a China deal, who knows what that does to the markets?
If I was to oversimplify the framing of this, U.S. and China have absurd levels of reciprocal tariffs at the moment. And if you believe those are in place, then the global economy is in trouble and you should be bearish. But if this is a matter of who makes the overture first or blinks, but we know it de-escalates, then I think the downside it comes off dramatically, and I think stocks can actually do really well into the rest of the year.
So you'd be a buyer right now?
Yes, and with the apology that, of course, I didn't think Liberation Day was going to be this draconian, but yes, I would be buying stocks today.
What would you buy?
Well, one of the things we did for our clients last night is to look at what's called, Walter Deemer calls sold out stocks, which is worse than oversold. Sold out stocks don't go down because there's a lot of bad news priced in. Mm-hmm. There's a lot of stocks that didn't make new lows on Tuesday, April 8th. They made their lows a month ago, and they had lower volume on April 8th. Those are what I'd call washed out stocks. A group that I think is washed out is the Mag 7. So I'd look at Mag 7 as a place to really expect a rebound.
And it's not that hard to be bullish Mag 7 because it's Mag 7. We'll finish up with this interview once we get through the close. But yeah, I mean, like, these are the best companies in the world, right? So like, it's not that crazy to be bullish on those. Nvidia up 2.93%, 2 minutes until we get into the close. Everything going green. Look at Hoodie up 7.84%. I have a very large leveraged Hood options position. You guys know about it. I have a lot of the 55-70 spreads for 2027 and a lot of the 9,500 spreads for 2027. So that is obviously performing well today. Realistically, it's just recovering a lot of what it's lost over the past couple of days. But I didn't expect Hood to have a 7% day. But again, Hood is a proxy on a bull market. If the market thinks we're going bullish, Hood really benefits from that. Also, again, we talked in the morning, Hood #1 on the App Store. Like, even through all the bearishness of the volatility, that's been beneficial for Hood, which is pretty damn incredible right now. And then obviously all the rest of the parts of the thesis you guys know about. So in terms of Hood, amazing day, up about 8% right there. Apple up 4%. Again, S&P looks like we're going to close just at that 2% range. Bitcoin 83.4. Shopify still down on the day. Even GameStop up 5%. It looks like we are going to have a green close to what has been a very, very turbulent week. Thank you, everybody, for being with me here today. Friday, April 11th, 4 p.m. The stock market is now closed. All right, there we go. We are done for the week. And what a week it has been. If you looked at the S&P 500 over the past 5 days, you would think it's been a great week. And like, the market's just had a lot of fun. And if you were awake on these days right here, as you can see, when we were touching those 2022 tops for the S&P, which were at this point lows for the year, it would have been a very emotional week, but nonetheless, an incredible, incredible reversal. Don't know what happens Monday, but taking it one day at a time, at least we can enjoy it on Friday. NVIDIA right here ends the day up 3%. Morgan Stanley ends the day up 1%. BlackRock 2%. Wells Fargo just down 1% on the day. It was down at 5% at one point, so a nice little recovery back down to only 1%. Robinhood ends the day 7.83%, and it currently is up again after hours. The NASDAQ up 2%. Dow Jones up about 1.5%. Apple up 4%. At one point, this thing was 168 this week, now at 198. Bitcoin, 83.8. S&P 500, again, up 2%. GameStop, 26.39. That was up 5.4%. AMD, big day, 5%. The Qs, up about 1.84%. Palantir, flat on the day. Not crazy. Not crazy at all. 88.55. Didn't go green, but basically flat on the day. Mercado Libre was green. Grab, I believe we broke 405, up 2% on the day for Grab, which is not bad. Even Open Door up 3% on the day. Coca-Cola was up. TQQQ, leverage Qs were up 5.29%. In terms of the semis, we pretty much went green across the board. Marvell, Taiwan Semi, Qualcomm. Intel was still red on the day, but it was down 8% at one point. Now it is only down 1%. SMCI was still down about 2%. Again, AMD up 5%. NVIDIA up 3%. In terms of the Mag 7, we are ending out with Apple green, Microsoft green 2%. Meta ended flat on the day, down about 0.5%. Nothing too crazy on Meta. Google up 3%, 159. Amazon up 2%, 184. NVIDIA up 3%. And then Tessie flat on the day. At one point, it was down almost 5%, 252 on Tesla. Flat on the day. MicroStrategy should have been up today, given the green. MicroStrategy, yeah, there you go. Wow, 10%. Didn't even see that. MicroStrategy, 299. Rocket Lab, that was also flat on the day, 1963. But it was not red. And then NVIDIA right here. So those covered calls would have taken my shares away. And that's why sometimes you got to be able to roll them, which just involves buying the call back and selling a new one for a different strike and different expiration. But we got out of those, and same thing with Hood. NVIDIA right here, up about 3% on the day. Fun week, huh? Fun week. Absolutely fun, crazy week. We got bond yields coming down a little bit after hours, which is not too bad. And we have a stock market that ended green for the week, which kind of looked impossible 2 days ago. But this is the nature of this market. Let's finish up with Tom Lee, and then we'll keep going from there.
Including stocks like Tesla.
Okay. You used the word draconian. That was your word. But I'm going to play off of that and say, well, what if we're in a post-draconian period where, because of that, we're left with the rubble of that decision making in the White House? And the damage has been done. CEOs have no visibility whatsoever. Do you see this consumer sentiment number today?
Yeah, they're awful.
Do you see where inflation expectations are?
Yeah, they've gone bananas.
Do you see what earnings expectations have done recently?
I mean, there's no ability to make guidance.
So what if the damage is already done now?
That's right. Now, we have to keep in mind this has been 10 days. So it is a shock, a high amplitude shock, but only of 7 days. So someone can restart the patient's heartbeat. I think that the White House is now keenly aware that Main Street can't handle a huge deleveraging because it is going to lead to job loss, and he's listening to CEOs. So I think there's a really big window to repair the bulk of this damage. And at the other side of this, of course, is that we have reciprocal tariffs in place that are acceptable. We have tax policy that's changing and less regulation. So I actually think the 2026 outlook is still quite good. Which
puts are you, so to speak, more reliant on now, a Fed one or a Trump one?
Well, I think there's a call at work and a couple of puts. I think that there is a Fed liquidity put that was in evidence today by the Fed.
When Collins said what she did?
Exactly. And we know the Fed put on rates strikes much lower. The White House has a policy put because we know that you can't brinksmanship the global economy to a halt just to try to get China to blink. And I think that the call is, I think there's a negotiator call, which means I think the White House exercised the Navarro call and replaced him with Besson.
So Lee right there kind of agreeing with the same argument that says, hey, I think that the monetary policy, or that the way the Fed thinks about monetary policy and tariff policy, they replaced the Navarros of the world, who Elon called an idiot this week, and the Lutnicks of the world with dissent. And as a result of that, that is what led to two pivots this week. One of the pivots being the 90-day pause, which markets loved and then they hated. And then the other pivot today being, for those that are just joining, three things. One, some of the Fed presidents told the Financial Times that they are ready to step in case there's any problems, which is like interesting, but I also think other Fed presidents said the opposite. So that's part of the reason we had a little bit of a green surge in the day, but that's one thing that happened. Number two, the White House confirmed that Bessent is looking at the Treasury markets and he's like keeping an eye on it. So they was kind of just like, hey, he knows what's going on. He's watching. And then number three, they said we have 15 trade offers on the table. And as a result of those 15 trade offers on the table, it was enough. It was enough. And they didn't give any specifics on the deals. Who are the trades offers coming from? Like, what are the negotiations? They literally just said, hey, we have 15 offers on the table. And at that moment, about 1:40 p.m. Eastern, that is what allowed not only the market to pivot, but take a look at this, the S&P 500 to rise 5.7% for its best week since November 2023. Pretty incredible, dude. It's pretty freaking incredible. But this is the market that we're in. And this is why just staying in the market and trying not to time it. Again, there are a lot of things we're analyzing from a variety of different perspectives in terms of what's going on with yields and stocks, et cetera. But all of that is to say that trying to time exactly how to navigate all that stuff, it's never been an easy thing to do. You've really got to be good at understanding timing. Most people aren't, including myself. And so kind of just staying long and strong and hoping that you can DCA into the quality names that you trust will be relevant in the next decade. That seems to be a bit of the game plan. Now, also, here's another idea, right? Stocks are up, stocks are green. That means puts get cheaper. So if you really went through a lot of volatility over the past couple of weeks and you just couldn't stomach it, it is not crazy to buy some cheap puts on some names as protection. If you lose that money, you lose that money, but you sleep a little bit better at night because if these stocks do fall, then you have some puts that can at least hedge against some of these stocks falling. So if anything, the green gives an opportunity either to sell into the rip, which is your decision, or to buy a little bit of protection, which is not the craziest thing in the world. JP Morgan right here up about 4% on the day. Robinhood again up 7.8%. The S&P 500 5.7%. And the NASDAQ right here up 2% on the day. MicroStrategy 10% on the day, along with Bitcoin. Just an incredible day for this asset that has been relatively resistant through all the volatility. 83.7 as we close out the day on Bitcoin. Not bad. Not bad at all. Exciting to see. Now, again, on Monday, we are probably going to, or even over the weekend, we're probably going to have to deal with even more headlines because Trump is probably going to keep tweeting stuff and there's going to be different conversations around tariffs and China, and maybe the retaliation gets worse, but we'll deal with that next week. The point is enough of a little bit of a pivot happened today to get the markets to feel comfortable. I mean, the fact that this happened on a Friday, when markets tend to sell things off because they just don't want to hold through the uncertainty of the weekend, is also pretty relevant to the fact that markets were oversold and they were ready to pump. They just needed a catalyst, and Trump gave them the smallest of smallest catalysts to get that to happen. Let's bring on one of our favorite analysts on the show that you guys basically have concluded it's his show, and I'm just here to make sure that his StreamYard is working so he can come onto the show, and let's get his thoughts about how everyone was freaking out for no reason. Steve, good afternoon. How are you?
Hey, how's it going?
It's going very well. How are you? How's it going for you?
Can't complain.
What do you think about the S&P having its best week in a year? Or sorry, since November 2023?
Okay, indifferent.
I know you're smiling right now. Like, you're not saying that with a straight face. I know you're smiling.
I don't know why you're laughing.
Oh, I love it. I don't even think you checked the markets today, right?
I actually have no idea what happened in the market today.
And still, people want to hear every little thought in your head because that's how much they love you.
I know PPI came in good. I don't know anything else.
Can I show everybody the steak you have today?
Yeah, what do I care?
Okay, guys, see, this is too much pink. It's too much. I'm sorry. You guys might think it's a perfect steak. I think it's not cooked. That's just me.
It's a definition of a perfect cook.
I think it needs a little bit more well to the medium.
I got news for you. Nobody agrees.
Well, that's okay. No, I guess I'm going to be a contrarian on this forever. So there you go. Put
a poll up. I guarantee you 70% or higher goes my way.
Exactly. So we don't need to do the poll because you're going to win. So
yes.
No, but in all seriousness, obviously we got some potential deals announced on the table. The Fed said we will step in. Some Fed presidents disagreed, but some Fed presidents kind of gave the market the reassurance. In general, yields started coming down just a little bit, and we had the best week since November 2023. Is your opinion now that as soon as we get a China deal, we are back on for a bull market?
If you get a China deal that is somewhat fair, the market's going to rip.
I agree. I think it is highly likely now that markets interpret any piece of good news as a reason to celebrate. Now, what could you say could happen on Monday for this to kind of reverse? Do you think this momentum is solid, or do you think it's as fragile as it was when we had the 10% pivot 2 days ago?
I don't think it's fragile because I think we saw the bottom. I think we were at the worst point that we were on Sunday night. I think we've had a week. A lot of things have been said. A lot of things are coming to fruition. We have a pause. I don't think that these tariffs with China are going to end up being real. I think they're going to negotiate. And I think that the market's going to be in a better place because the worst case scenario is already behind us.
Now, when you say worst case scenario behind us, one of the more worst cases could be that we don't lock in deals, or that this China thing takes a long time. You think that's even, no matter how long it takes, it's going to happen, which is why it's behind us, essentially.
Yeah, everybody knows it has to happen. It's just a matter of when. I think you're going to get, just like I said to you in the text, I think we're going to get a lot of small wins that add up to one big victory. And I think China will just be a mediocre deal that after everything that's happened, it's going to look really good. And that's the best part about it. The China deal only has to be mediocre at this point. It doesn't have to be anything crazy.
Yeah, I think that's fair. I mean, literally, if they take off 150% tariffs back and forth, and they put it at what, 20%? That's probably enough for the market to be like, okay, great, we're good.
Yes, because it allows everybody to forecast. Everybody still makes money. There's no uncertainty. You get some protection. So I'm really not that worried at all about it.
Yeah, I agree. Now, here's one of the Fed presidents, Collins, said the Fed is absolutely ready to help stabilize the market if conditions become disorderly. Do you think that also gave markets assurances that the money printer would be turned on if needed?
No, I think the Fed knows that they can't just sit on the sideline idle at the moment, and they have to be ready to do something. So I think some of the Fed presidents coming out and saying that is a little bit of reassurance that they are paying attention to what is happening, and that there will be a conversation about stepping in if needed. So I think that gives some level of protection to the downside.
Yeah, I agree. Because, and again, even though there were conflicting statements, what's important there is that some Fed presidents would advocate in a hypothetical.
Let me guess, Kashkari came on and said something different?
You are exactly correct.
Of course he did.
Yeah.
Okay.
Kashkari's been hawkish for a long time, but the point is, the market listens to him. So,
as they should.
As they should. Yeah.
As they should. I mean, look, long-term investors are not going to get hurt. And this is going to be something where people are going to make a lot or lose a lot in the short term. And there's a lot of things that need to get shaken out. I'm sorry, but I agree with Ackman. The amount of leverage in the market's not good.
Well, Ackman's tweet was kind of weird last night. I mean, he's freaking out about the bond market. So he was like, why do we have leveraged ETFs and 0-day options?
We have them because there's a market for them. And if there's a market for it, you're going to have a product for it.
Yeah, but he's basically saying, why are they contributing to our society? I'm like, this is a little...
I don't agree with the argument. I agree with the premise that there's too much leverage in the market.
Okay, that's fair. Yeah, I would agree with that as well. But the idea that it's not contributing to our economy, it's like, well, there's a bunch of... How is short selling contributing? Like, there's so many different slippery slopes you can go down.
The context was the wrong way to go about, in my opinion, but the idea of it is correct. Too much leverage, too many people on margin, triple levered ETFs. I mean, look, there's a product for it, but the volatility is so much that imagine going on leverage to buy a 3x levered Qs. Think about that. You can't tell me that that's healthy for the market overall. If you have, I'm just going to throw out a number. If you have 2% of the market doing that, that's nuts. Even though we know we don't. I'm just saying, it's crazy.
Yeah, it actually is funny because like people they will borrow money to then buy something that is already leveraged against what they're borrowing. And then if that goes under, like they're just screwed, you know?
Yes.
Yeah.
But I think we're going to be fine. And I think people are looking at rates at 3 a.m. for no reason.
I think if people are looking at rates at 3 a.m. and then deciding to sell because of whatever chart they looked at, that's an issue. But at 3 a.m, sometimes you gotta look at rates.
You should be
So
sleeping.
that's right. I should have been sleeping. I slept like a baby last night. PPI came in really good. Does that further the argument that the Fed needs to cut rates ASAP?
Yes, it's confirmation that the CPI numbers are real. It's confirmation that everything's going in the direction that they need it to go. And we are so close to the neutral rate, they are going to screw this up if they just do nothing. Because you have a credit crunch that's going to happen. If you keep rates where they are, when debt that was borrowed 10 years ago starts terming, or 9 years ago, because debt at 9 years ago, they could have taken out debt over a 10-year period. So you need rates significantly lower. That's the biggest thing right now. Where's oil right now? 58?
Let me tell you right now. Oil ended the day 61.
Okay. Oil between 55 and 65 is where you want it. Oil was so much higher. Oil was 80, 90, over 100 a year and a half ago. Prime drivers of inflation. That is significantly down. That may be even more than what tariffs are going to add in. Still yet to be determined. But it is such a key indicator that inflation is coming down. And we haven't even felt oil at these levels rip through the economy yet. We really may be very close to 2% on a real indicator right now. So,
well, Trueflation already has us at like 1.3 right now.
1.3. It was 1.8 a couple weeks ago.
Yeah, 1.35. There you go.
So, yeah, it is. We're doing fine. It's trending where it needs to trend. The worst thing the Fed can do is hold, because they can't be late to this party because of the amount of debt terming. And we don't have a housing market that's doing anything. There's no inventory. Nobody's selling because nobody wants to give up a 3% mortgage. You need rates somewhere. You don't have to get back to a 3%, but you need to get mortgages down to 4.5 for people to actually feel like, okay, it's worth it to upgrade because I'm not getting that killed on the amazing refi that I got myself into. But at 7%, nobody's freaking upgrading unless they're moving because of a job.
I 100% agree. We got Beckert in the chat saying, Steve making an offhand comment around margin is one of the reasons I got off of margin in January 2025. Wow.
I'm not saying to get off of it. I'm not saying to use it. I'm just saying I think it's risky and unhealthy for the market.
No, but that's fair. Just even, having a calm voice about, hey, if you're going to use margin, understand the risks. That's enough to get people off of it who probably don't understand the risks.
There's a lot of risk with margin. Including myself. I mean, people get margin calls for a reason. You owe money because of account maintenance. Like, there's a lot of things that go on with it.
Yeah, I agree. Here's a question for you, Steve. Let me read some stats because I don't think you saw these today. But Morgan Stanley beat revenue estimates by 18%, 7%, beat EPS by 18%. Wells Fargo beat EPS by 13%. JP Morgan beat EPS by 9%, beat revenue by 3%. Same numbers for BlackRock. Did the banks just prove that we are in a pretty stable financial system, and as long as we get tariff certainty, we're going to be okay?
They proved it last quarter too.
Yeah, I agree.
And I got news for everybody. If rates come down by 100 bips or 150 bips, you're going to see earnings go even further for banks because the amount of volume is going to be insane for borrowing capital. Loan originations is going to spike hard. And
that's a good SoFi thesis. I mean, we get those rate cuts, we're going to get those refis, and all of these banks, and if then the IPOs come back, I mean, this could be really exciting for financials.
Yeah, you're going to have M&A activity come back. You're going to have the IPO market open up. You're going to have a lot of refi on mortgages, student loans, personal debt. I mean, business loans. There's nothing wrong with getting rates down to where borrowing costs are 3.5%.
Yeah, again, the only fear here is inflation, but if Trump walks back the tariffs, that can help when it comes to.
And if you get a big enough tax cut package, it'll offset everything because everybody's got more money in their pocket. So, not too worried about it because the cornerstone of his previous administration was getting a big tax bill, among a few other things. It's going to be a cornerstone of this one too. So they're going to work on getting a big tax package.
I agree. Warren Wang, thank you for the super chat. He says, Steve, I still have some SMCI. Do you have any thoughts on this stock currently?
I mean, I don't have any. I think it's going to be okay in the long run, but SMCI may have some problems depending on tariffs. We don't know. We got to see how the tariff situation plays out. But everybody needs servers, and I think the long-term premise is okay with SMCI because the amount that Taiwan Semiconductor shot up with revenue and the projections for NVIDIA, I mean, you got to think that SMCI, Dell, and HP are all going to be okay.
Yeah, agreed. And if I know your moves correctly, Steve pretty much got rid of most of the SMCI for NVIDIA, so he has higher conviction on that one. But obviously, if NVIDIA does well, SMCI should do well over the long term. Cool. So here's another stat. The average 30-year fixed mortgage rate in the U.S. climbed back above 7% after being at 6.55% last week. That's because of yields rising. This has kind of been your point, right? Which is that it's unsustainable for anyone to finance their house at these rates, which means either we need yields to come down or we need rates to get cut in order for the housing market to actually open up.
Yeah, and once again, you can't look at historical levels and say, well, the historical average was 5% or 6%, so we're fine. Yeah. Because that's not the model that we are in. We've been in a cheap debt model where 2016, 2017, 2018, you had under 2.5% Fed rate. You had under 2% Fed rate in the post-pandemic era. People were able to refi and also get mortgages at 3%. So now you have a lot of people locked in. So you can't look at historical because saying historical is 5 or 6 means nothing because we never had debt as cheap as we did in the past 4 or 5 decades.
Gold just had their best week since March 2020. You think that gold's a little toppy?
Do I think gold is a little toppy? I don't know. I own it. Keeps going up.
Which is been a winning strategy forever. But it is interesting right here that potentially investors not only sold off stocks, they sold off bonds and they bought gold. But if bonds get more exciting because the tariff stuff gets walked back and then stocks get more excited because we get rate cuts, not saying gold has to crash, but maybe
gold is always the true flight to safety.
Correct.
Okay, because you can hold it.
Yeah. I think it's going to be interesting to see how it plays out, obviously, if money starts leaving those to get more risk or to get less risk with bonds. Money market inflows. So yesterday we saw money market inflows leave to the tune of $25.4 billion. We still have 7.01 trillion on the sidelines. Do you think the trend continues and we see more money market outflows over the next few weeks?
Yeah, I think that the real outflow from money markets into equities is going to be when the Fed cuts. I mean, now is a great time to buy. I still think so if you're a long-term investor. I also think you're going to see a flight to safety. Look, Enterprise Products Partners, which I just put out an article today on, is going to be a very high-quality name that I think is going to catch a bid, and they're going to see big volume in the future because as the Fed cuts rates, this is an MLP.
Hold on. You got to dumb it down. What is EPD? What is an MLP? What is the stock?
Enterprise Product Partners. It's a master limited partnership. They have 60,000 miles of pipeline, fractionators, 300 million barrel storage, exporting facilities, crude and natural gas run the economy. They're one of the biggest transporters of fossil fuels. And they are in a position where they are yielding over 7% again, based on where unit cost has gone down. They have units, not shares, because it's an MLP. And they have raised the distribution 26 years. And I think at a rate of like 2.5% a year. While the Fed is cutting rates and the risk-free rate of return declines, you're able to lock in a 7% yield now and get a growing distribution every year going forward. They're generating enough distributable cash flow. Their coverage ratio is around 1.7% of what they pay out in distributions or distributable capital from distributions and buying back units. So it's the gold standard in MLPs. But these are companies that can't be replicated. You can't go buy permits, buy land, and build 60,000 miles of pipeline. So they have a huge moat around them.
I just linked Steve's article right there in the chat if anyone is curious on this one. So question on this dividend right here of 7%, which is obviously very attractive, 7.2%. Your argument is that energy obviously is still incredibly important. It's going to be hard to replicate what they've done with pipelines. Therefore, you think it is discounted against that core moat.
Well, it's not that it's hard. You can't replicate it.
Right.
So when you look at their infrastructure, Energy Transfer, Enbridge, 10K, Kinder Morgan, energy infrastructure is already built. There's no new competitor building energy infrastructure. It just can't be done. And you get expansion from the major players. They are the toll booths of energy. With the growing population, increased standard of living, and extra data centers being built, the projection for liquid fuels on production and consumption is higher going through 2026 on the short-term EIA outlook. And the very simple way to look at it is if production and consumption is expected to expand for the next several years until the long-term energy outlook comes out later this year, it has to be transported. More fuel being transported, more fees for services. EPD and all these companies are a winner by default because it's the safest and most efficient way to transport fuel.
It's fair. It is fair. And you've been deep in the energy companies, pipelines for a long time. So you kind of understand.
Yeah, they're a winning recipe right now. I mean, they've been very undervalued for the past 6-7 years. You know, in 2015, you had an explosion in the sector. Everything got re-rated, massive amount of debts. These companies are cleaning up the balance sheets, generating additional EBITDA and distributable cash flow. And people want to talk about the value of tech. Got news for everybody. The value of pipeline companies could be more from just a multiple from what it should be. Obviously, it's not traded that way. But if you don't have these companies transporting energy, the economy shuts down in a blink of a second.
Doug has a question right here saying, I have ET and Kinder Morgan.
Love them.
Do you feel consolidation in this space matters or diversification through?
We've seen consolidation. 10K just purchased Magellan. They purchased Enlink. Some other companies got acquired. Energy Transfer has acquired Sempra. They acquired some other one last year.
But so, you own all of them. You don't just like have a favorite pick.
Right? Yeah, I mean, I have directly Enbridge, Energy Transfer, Kinder Morgan, 10K, and Enterprise Products Partners. But I also have AMLP, which is the dedicated ETF to the basket.
Correct. That's what June is saying.
Which is probably the easier way to do it. The
right.
difference is AMLP doesn't have Enbridge or 10K because they're not MLPs. They're structured as C Corps.
People want to know, do you agree with Chris on VG?
Long term, I do.
Yeah, I've been saying that as well. It's a decade.
Yeah, I don't own it. I mean, I didn't really do a lot of due diligence on it because the numbers weren't where I wanted them to be. But long term, they're going to be great. I mean, it's probably a great value here because exporting is going to be huge. There is going to be huge demand for American energy. I think VG is projected to be the second largest exporter by capacity.
Yeah.
Behind Cheniere. So them in next decade should do really well over the next 5 to 10 years. And VG already has a lot of stuff in operation. So I'm probably going to give it a real hard look over the next couple of weeks.
Yeah, and one thing right here, and you put this in your article, but just important to mention for everyone, some of these energy names, they are taxed differently. So there's a K1 document that everyone needs to make sure they watch out for if you buy some of these names.
Yeah, I would talk to an accountant.
Yeah, if you're buying some of the energy pipeline names, just make sure you talk to an accountant when it comes to filing your taxes. Okay, here's a fun question, and I think everyone in the chat can participate in this. I don't think I've asked you this for like a couple months, so you might have to do a little thinking here. Okay, Harmsy says, can you ask Steve to rank the Mag 7 in order of 5-year opportunities best to worst? Everyone in the chat can participate as well. So best
So not value proposition, best of worst for opportunity.
Yeah. So the way so it's
No,
timeline.
I got you.
No, but timeline's 5 years, and let's go worst to best. Give me the best at the end. So let's go worst to best. So 7-1.
I mean, I don't even know who's the worst. Apple.
Oh, Apple. Okay, so Apple number 7. Let me make a Google Doc. Okay, Apple number 7. Okay, that's the worst over 5 years. Interesting. I don't think it would be that low.
Well, you said 5 years, not a year.
Okay, Apple is the worst. What's number 6?
I don't know because they all have a lot of prospects. Microsoft, I guess.
Okay, that was...
Even though I don't want to put them there, I think I have to.
Okay, number 5.
Alphabet.
I actually can't disagree them. All right. Number 5 is Google. Number 4?
Meta.
Okay. Number 3?
Amazon.
Ooh, okay, before you say it, put in the chat who is gonna win, because it's NVIDIA or Tessie, baby. We got 5 years. We know Steve loves NVIDIA. We know he kind of likes Tesla. All right, Steve, number 2. What do you think?
Tesla.
Wow, I thought you would go NVIDIA.
If it was 10 years, I would have probably said Tesla. But keep in mind, the question was opportunity. That's how we're structuring this.
I thought you would put Tesla.
No, I don't think 5 years is enough for Optimus to really be accretive enough to earnings where it's now to NVIDIA. 10 years could be a much different story.
Yeah, that's fair. If it was 10 years, I think you would have gone Tesla easily.
I probably would have.
Shout out to Farzard in the chat. Yeah, I think I would agree with the list. I think I would put Tesla over NVIDIA just because I think Optimus in the next 5 years can take off. But it's really just...
No, it's not about taking off. It's about scaling in 5 years and generating more net income than NVIDIA is going to. It's not happening.
I mean, Elon says 500,000 bots by 2027, which is 2 years away.
Okay. What's 500,000 times 20 grand? Do the math.
I don't think they're going to be 20 grand originally. I think they're going to be closer.
Oh, so do 30. I know what the number is.
Was it 15 billion? 500,000 times
150 billion.
And if that's trading at a what, 80% margin?
That's revenue. NVIDIA is going to be doing that in net income.
Well, we hope in the next 5 years they're doing that, right? Like this whole AI CapEx
Keyword hope.
Yeah, but the AI CapEx stuff has to continue vehemently in the next 5 years. Yeah. Tesla has the whole vertical of Optimus, which is taking off over the next 40 years, in my opinion.
Regardless, the opportunity is there for them.
Yeah. I mean, really, it's just a question of how cyclical is NVIDIA in the next 5 years versus how much execution does Tesla put up in the next 5 years. I think that's what...
Yeah, I don't think they're going to be cyclical. I think it's going to be growth over growth.
All right. So you got... as the one good point about robots, Farzad mentions right here, is that that's recurring revenue. It's not a one-time thing. So that's another thing that's very exciting.
They will be putting a learning package in that's a monthly fee. There's no way they don't.
Yeah. And then obviously a robo-taxi. Oh, can we both go to Austin together and get in a robo-taxi in June?
No, I'll wait for it to come here.
No, but why can't we just take a boys trip to Texas?
Because I'm not wasting my time going down there to get a robo-taxi.
No, we can get some great barbecue, right? We can hit up Farzad. He can take us to a good barbecue spot, and then we get in a robo-taxi.
All right, we'll see if we can make something happen.
We need to get Steve in one of these cars that has no driver so he can see the future. We got to see it. All right, pretty cool stuff. It's been a fun week. It's been an exciting week. A week that Steve didn't care about, and then he cared about it, then he didn't care about it. So you probably had the most relaxed week out of all of us. But we're green for the week. S&P 500, 5.7% best year since November 2023.
In 3 to 6 months, this will all be a distant memory.
Yeah, I agree. I mean, I think it will, but see, again, every time I want to say that, like Trump tweeted last night that Mexico is going to get tariffed if they don't send more water to South Texas, right? Like, it's just random things like that no one is ready for, which it whipsaws you.
The fact that the market is moving on tweets like that is stupid.
Well, the fact that the market reversed because the White House said, oh, we have 15 trade offers on the table. And the market was like, okay, cool. That's enough. Buy stocks. Like, that's crazy. That's how much little they care about everything else other than just like, hey, do we have deals and we're ready to go. And I think it's also because CPI and PPI were so good. Now the market's really starting to price in, okay, maybe these rate cuts are legit going to happen. And as a result, you see momentum.
Yeah, I may be writing a letter to Jay Powell this weekend.
Well, what's going to be in your letter?
I don't know. I got to think about it.
I will try to tag him if he's on X so he can see your letter as well.
I mean, I know Kashkari is.
Kashkari is on X. That is correct. He is. Farzad, thanks for being here. He says, have a good weekend. Shout out to Farzad. Appreciate you, brother. Thank you for being here. Steve, here's a question. TLT, if we think yields are topping, rates are coming down, CPI, PPI is moving in the right direction. It went from 94 literally April 4th, so last week, to 86 today. I bought it. Do you think it makes sense to bet on yields coming down, which means TLT goes up?
If you have 2 or 3 years to wait, TLT could be a great investment.
Yeah, I do think it will take some time, but I also think it's trading at a 5-year low.
Look at where it was. It was trading at 160 or so.
Yeah, we saw that in the morning. It was 2020. It was trading at 160. Yeah.
You know, who knows what the Fed's going to do? But if you have 2 or 3 years, I think that it's going to end up being a pretty good investment.
Yeah. No, I agree. And a lot rate cuts really help growth stocks. So growth stocks probably outperform TLT, but just as a hedge against some of the volatility, TLT also could do well as we cut rates. All right, cool. Steve, thank you for joining the show.
Yep.
Appreciate your analysis yesterday and today. Are you doing anything over the weekend?
I'm writing a couple articles.
All right. I love it. Good stuff. Thank you, Steve.
All right.
We will talk to you
everybody
next week.
later.
Yep, later.
All right, bye.
My expiration was Jan 2026, $100 calls on TLT, which means realistically by the summer, I think we should be closer to 100. And yeah, if next week this thing pumps 15, 20%, I would get out of them because they're calls. But I think by next year, and what pulled the trigger for me is the CPI, PPI data. Like, that's going in the right direction. So are tariffs inflationary? Yes, but I expect Trump to walk it back as a form of negotiation or whatever, and it's not this absurd 150%. That, along with the Fed cutting rates in June, which now there's over a 50% probability, and CPI, PPI coming down, I think is enough to say yields have topped. Now, have yields definitively topped? No, because you could have said yields topped last week and then they came back this week. So I don't expect TLT to immediately just like keep surging. But once the bond market stops worrying as much as they're worrying, which Besant is going to have to make sure he keeps them intact, I think TLT should be something that does well. So that's what we got in the context of TLT. Someone says TLT is a hedge for a recession. If we get the tariff thing over with and the Fed cuts not due to recession, you could do better in equities. Yeah, that's true. If we have a recession and the Fed cuts in the context of because we're like growth is slowing down and we need to stimulate, that's also where TLT could be beneficial. Obviously, individual stocks would get hurt if we're in a recession, but that is something TLT can do well on. But then again, look at the earnings today. Like, none of the earnings in the banks felt recessionary at all. Now, Michigan consumer sentiment, yes, that wasn't the best. CPI, PPI coming down could be a little bit of demand destruction. That's fair. And I guess Q2 will really tell us, are there the signs of a recession starting? And hopefully this tariff stuff is done by then. But the fact that BlackRock has AUM at all-time highs, JP Morgan, incredible numbers across the board. Morgan Stanley, like a tech company, is growing 18% year over year, and it's a bank. I mean, and JP Morgan raised their dividend. They bought back more shares. I mean, these types of things in the financials, along with potential refinancing coming back, M&As, IPO, et cetera, that obviously could be very beneficial for the broader market as well. I did not go through all their guidance yet. Again, a lot of their commentary was just cautious about tariffs. But if the tariff stuff goes away, I think the guidance also has to change to an extent, right? It's hard to give really good guidance with all this tariff volatility. But if in the next 90 days, tariffs are gone, China's walked back, or not tariffs are gone, but like all the deals are on the table, et cetera. And my conspiracy here is that there's a wild card that 10% flat turns into 5% flat because of all the great deals that Trump will say they've been able to achieve. So they don't need those high percentage rates, especially if bonds start creeping up again. The Senate might end up saying, hey, we really do have to lower this tariff rate to get rid of inflation expectations. That could be enough for the banks to be like, all right, like we're in a much healthier situation and we don't need to be as scared anymore as well. A couple stats on Hood. So Hood, incredible day. Really just like continuing to show a lot of momentum. Now on Robinhood, they have opened up the prediction markets at an incredible level. So you can bet on inflation in April, CPI in April, Fed funds rate in May, job numbers in April, US GDP growth in Q1 2025. You can even bet on the average price of gas in the United States in April of 2025. And to me, I think Robinhood, just based on looking at some of these different prediction markets they have, I think they're going to be trading tens of millions of contracts every single day. They're already trading tens of millions of contracts, but that really has to do with the NCAA tailwind. But the NBA playoffs are coming up. You've got NHL, you've got baseball. I mean, like if they just incorporate themselves into pop culture, sports, and the economy when it comes to prediction markets, they legitimately will have tens and tens of millions of contracts, if not hundreds of millions of contracts traded daily. Now, again, they don't make a ton off each contract. It's a small commission, but that adds up over time. And more importantly, it deepens user engagement. And so if there's going to be thousands of prediction markets in the future, it's not going to move the needle in terms of revenue. It's not going to fully diversify the business outside of the volatility of the markets, but it definitely helps subsidize a bunch of different costs they have for the business. And it's another vertical that has potential for growth, which is what the market cares about. They care about growth. And if you're able to grow, that is what gets you a premium. This is a great chart right here by Arnie. As you can see right here, he showed a chart of Coinbase crypto revenues compared to Robinhood crypto revenues in Q4 2024. Robinhood trailing 12 months did 626 million. Coinbase did 6.2 billion. Literally 10x Coinbase did than Robinhood. What does that mean? That means there's a lot of growth left for Robinhood to be able to capitalize on the crypto markets, given how much their revenue is compared to Coinbase. Coinbase is obviously global. They have a lot more assets. Robinhood still putting up some decent numbers, even only being in the United States and the EU, and 10x less the assets that Coinbase has. But that part of the business has a lot of potential as well, which is also very exciting for Hood. Did I make any bets? I made one bet in the NCAA tournaments on, I don't know, some random team. I forgot. Again, I really don't like do these prediction contracts too much. But for those that want to do it, like you have the opportunity to do it. And I don't know, maybe during the NBA playoffs, like I still like the NBA. If there's some playoff matches I'm interested in, I'll take some bets. But the point is, there are quote unquote professional people, and maybe I shouldn't even put quotes around it. There are professional people that do this for a living, and you could say it's gambling for a living, but a lot of people study every little nuance of a player's statistics, and then they aggregate all that data, just like you're looking at financials for a company, and they say, hey, I think this team can beat this team based on XYZ. And yes, is it gambling to an extent? Sure. But if they choose Robinhood as their core platform to do that on, I mean, that's just a massive, massive opportunity for them as well, which I think is very exciting. My ET dividends payout on 415. Yep, there you go. I mean, in this market as well, people will be chasing yield if rates come down, which is another reason why some of these high dividend paying stocks that are like good quality businesses in the first place are primed to do well. Bitcoin right here, 84,000 after hours. We do have a new picture by Sir Peter Beck. He was meeting with some Congress official. Yeah, here's the picture. He met with one of the representatives, and he said, Rocket Lab's frequent electron launches and development of the neutron rocket are remarkable. We need to keep fostering this kind of private sector growth to keep competition in spaceflight. So there you go. Sir Peter Beck headed over to Congress and did some networking here, which is not too bad for Rocket Lab. Again, it feels exciting right now. It is obviously euphoric as we end out the day here, but we're not out of the woods, and it's one of those things where can we get Monday to be a continuation of this, because we really didn't see that in the middle of the week. And if we can, maybe we can try to get some more momentum. Let's get some more coverage on how the market ended for the week, and then we'll keep going from there.
Trying to find a bottom here, and if it is, Do you buy the dips?
Yeah, I think the market right now is getting a little bit of relief on the hope that this set of tariff policies are going to eventually and quickly be reversed. If you look at surveys of investors right now, the expectation, 80% of them expect this tariff policies to be wiped clean within the next 3 months. And I'd say that is a pretty aggressive expectation. It's a reason why the market is where it is today. If you expect any chance that these tariff policies are going to persist or there will be increasing conflict with the Chinese as a function of the extraordinary tariffs there, the S&P 500 at these levels is not at all close to pricing in the type of recessionary dynamic that will occur if these tariffs persist anywhere close to where they are now.
Okay. Charlie, want to get your thoughts on what we've seen, especially given the fact that so much of the action, so much of the volatility has not just been in stocks, despite massive intraday moves that we've seen for the major averages every single trading day this week, but in the bond market and also in the FX market. Can we say that bond vigilantes are back?
Oh, absolutely. We have grown up taking for granted that the risk-free rate is the U.S. borrowing rate by the U.S. government. And if that gets called into question, it changes everything. It changes the discount rate on bonds. It changes the discount rate on a regular mortgage. It changes the discount rate the U.S. borrows at. We borrow about $30 trillion. That's trillion with a T. And it's all based on a certain understanding of who the U.S. government is, the fact that we're the most pro-business country in the world, the fact that we have rule of law and sanctity of contracts. If you start to change all that and say that we're going to be unpredictable, and all of a sudden the Japanese and the Chinese don't want to buy our $30 trillion, then everything changes, and that it doesn't change for the good. So this is a very important time. Frankly, I didn't sleep well Saturday and Sunday night thinking about the bond market, because if the bond market starts to have trouble and people stop buying our bonds, everything changes.
Yeah, look, he's not wrong about that. He's not wrong about that at all. It's just a tweet could change the bond market, and this is the current market that we're in. So, like, yes, he's not wrong about the fact that the bond market is very scary in terms of when we see these yields go up. What does that mean for the overall trading landscape? And obviously, what that means for equities. But still, it also means, yeah, maybe hedge, but maybe don't leave the market if the market in and of itself can change so quickly. If the administration, and it's kind of a game of cat and mouse, right? And it's like we know at some level that there is going to be a change in the administration's policies. It's just when. And until we figure out when, obviously that's going to be an issue. The 10-year right here after hours up just a little bit, 4.497, and the 30-year 4.877. Again, we are not out of the woods in the bond market. It feels nice, it feels euphoric, it feels green. It's like, all right, we got some momentum, but that same feeling we had, and then the market woke up the next day and said, it's not enough. Monday, that could happen. Market wakes up and says, you know what? There's still too much volatility. It's not enough. We need more clarity. I don't blame the market for feeling that, because we got a lot of random moving parts moving around. So we'll take it day by day, but it's not like it's an all clear, ready to go, which makes investing in this environment is super interesting, right? It's like yesterday I was all going to shit, and then today you're up so much money and you're just like, all right, so your heartstrings are being played with, but I think that's the price you have to pay to exist in this current environment when it comes to investing. Okay, Farzad's back. Shout out, dude. Farzad, can you join the channel for a bit? Can we get you talking about Tesla? It's a Friday. If you have any time, I can send you this link on Twitter at all, even if it's just through audio. I think people would love to hear from you. Explain why Tesla should be number one versus Nvidia, which I agree with you. I think Tesla 5 years is way better than Nvidia. I just think there's more potential in the robots. Let's see if we can get Farzad on. Did Webull go public today? Ticker symbol BULL. Did they go public today? BULL. Dude, how did none of us talk about this? I don't think a single one of you said in the market open that Webull went public. Farzad, I sent you the link on Twitter, so you can call in. That's crazy. Okay, so the IPO was up 10% on the day. After hours, it's up another 20%. Volume was 2 million shares. Market cap is 6.2 billion. Okay, Webull goes public today. I would like to see some of their financials now that they're public. Looks like the IPO was successful. Yo, Robinhood threw hella shade. They didn't even offer the Webull IPO. Maybe they didn't get the allocation, or maybe they were just like, fuck these guys, but we're not gonna offer them the IPO. Yeah, there he is. There it is. Webull. Interesting. Webull. Yeah, none of you guys on the market open. I didn't see a single. Well, it wasn't public during the market open. It was still probably, it went public during the middle of the day, I guess. Market cap is 200 million bucks. Is that no, there's no way the market cap's 200 million. Their S1 had a market cap of 7 billion. Did they really reprice it to 200 million? That doesn't make sense to me. I feel like Webull is worth more than that. It's 6 billion, right? Yeah. It's not 200 million. 6 billion. It's not 200 million is a penny stock. There's no way. You don't even go public for 200 million. Yeah, that's weird. Robin has the wrong number there. Your phone is dying, bro. Do this thing every time, somehow. I do charge it during the day. Like, I have to run on some level of charge, right? So it would be impressive if I keep it at 2% the whole day and I get through the day. That would be crazy. Yeah, I think it's 6.24 billion. Okay, cool. It was 4 billion, but you added 2 with your streams. Yeah, I think it's 6.2 billion. All right, well, I'll go through their financials over the weekend. I'll try to get you guys some updates on that next week, and go a little bit more deeper into that IPO as well. Farzard, what's up, man?
I got a couple minutes. Can you hear me okay?
Yeah, I can hear you. We got you really
Okay.
like what, 5 minutes?
Yeah, 5 minutes.
Okay,
Yeah,
so 5
my
minutes.
little guy's falling asleep.
Oh, I love it. You do it for those that
Yes.
don't know. Farzard became he's 1 now, right?
He's 10 months.
Wow.
Yeah, dude. It's
That's
crazy. It's a crazy time.
That's very special. All right, so we got you for 5 minutes. I'm linking Farzad's YouTube right here in the chat so everyone can check him out. I've been on his podcast multiple times. But here's my question. Why Tesla in the next 5 years over NVIDIA?
Yeah, I mean, I do think the Optimus robot sort of opportunity is being heavily discounted, and it's honestly one of the pieces that is part of the whole tariff situation with China too that I think is being heavily discounted. What is one of the biggest national security threats for the next 5-10 years is having your labor essentially being limited by how much supply you have to create human or robots. And to think that that is not going to be a gigantic forcing function for Tesla, Aptronic, Google, Figure, et cetera, all these Chinese companies. China's biggest competitive advantage is the amount of people that can throw at factories. And human or robots immediately diminish their core competitive advantage. And the limiting factor for those robots is the brain. And who has the best brain? Who has the best brain for physical, real world AI? It's Tesla. Yeah. So now NVIDIA is going to provide the brain chips, but the chips are kind of like they're the commodity. It's kind of like the thing that powers the AI, but the AI is the differentiator because anybody can take NVIDIA's chips. Is what you do with those chips. And so Tesla is going to be able to take those chips and turn them into something significantly more powerful, which is literally you are limited. Your labor is limited by how many pieces of material you can push to the factory. And so I think from that perspective, and nobody's talking about it.
Dude,
Like,
I was just
nobody's
going to say,
talking about it.
I've been studying the robot space for a while, but I never thought about that argument that China's competitive advantage is their labor. If we automate the labor, that advantage is like not as competitive.
Exactly. So now it's just a question of like how fast can that come down the pike, right? Because he's super let's say optimistic about timelines. So the question becomes, is 5 years too quick? Maybe. But the other side of it is Tesla has already proved out real world AI with their cars, and they have and manufacturing prowess proven out with their cars. It's just scaling that up to human or robots, which is a different beast. It's more actuators, it's more material science, but most of it is just the brain. It's AI. So from that perspective.
Can you explain the reoccurring revenue part of this business model as well?
Yeah, so like every year, so when you hire somebody, depends where you hire them. You pay them how much? $20,000 a year, $50,000 a year, $100,000 a year, right? So if Tesla can be like, yo, you can buy this robot for I don't know 20,000 upfront, 50,000 upfront, and then you pay $10,000 fee per year to do these tasks, and depending on the complexity of the task, you have an upcharge. then it's like, okay, you automatically have a forcing function to hire that robot versus a person. And a person, you have to pay health insurance, you have to, hire HR, you have to give them time off, et cetera, et cetera. Whereas and listen, the forcing function over time will be that these rates are going to be extremely cheap for these robots 20, 30, 40 years down the line. But up until that point, the company that can create the smartest robots that are most capable and most fungible will be the winner. And that's 100% dictated by the brain, which Tesla has an advantage in because they have the physical real world AI prowess that nobody else has because of their cars. Because they're out there literally taking video in and pushing it through a neural net and then action out. And that exact thing applies to the human or robot.
1000%. All right, last question for you, Farzard. Thanks again for joining. Robotaxi launch in June. Do you think that's going to be successful?
Yeah, I think it's going to be successful for sure. It's going to be limited. It's going to be a trial. It's going to be small to start. They'll probably have people behind the steering wheels. I don't know, man. See, that's the thing, is regulation based, right? So it depends on what regulators force them to do. I do think it's going to be very successful, especially long term. And you should come down to Austin, bro. We should
Dude,
go
I'm
get some
down.
barbecue, get some beer, and then we'll go drive around, gallivanting around Austin, drunk off our asses in a freaking cyber cab. Why not?
I haven't had Texas barbecue in like 5 years, so I'm so excited. I'm down.
I gotta take you. Le Barbecue is the best, bro. Le Barbecue. Anybody from Austin? Le Barbecue, that's my spot. They just got a Michelin star actually, and
Wow.
they're legit. Yeah, they're legit. I gotta go, Amit. You're the best, dude. Everybody who's watching this, Amit is the greatest finance news channel on the internet. He is one of the smartest people I've ever met. He's one of the best hosts I've ever met. He's one of the nicest people I've ever met. And if you don't like and subscribe, I'm gonna up the costs. I'm gonna tariff your household income, and I'm gonna tariff your household expenses by 10,000%. And I'm gonna call Trump right now to make that happen. So you better like and subscribe. I love you, dude.
I love you too. And Farzad is very close to Elon, so he could get to Trump. There is a world in
Yes.
which he could.
So I will literally call him right now and be like, I need you to go on Amit's channel and I need you to write down all these names, and all these people need to get tariffs right now.
I love it. Thank you, Farzad. Appreciate
Love you,
it, brother.
See ya.
See ya. It's a great guy. It's a great guy. I love Farzad. He was gassing me up too much, but I love Farzad. But look, I agree, dude. Like obviously the chips are the backbone of everything with NVIDIA, but the real question of our lifetimes is, what do people do with these chips? And NVIDIA is still an amazing investment because they just have a monopoly on the chips. But like, what do you do with them? And right now we've seen two core use cases: FSD and LLMs. And LLMs primarily chatbots, FSD self-driving cars. The next biggest one to me has to be robotics. And we know it's going to happen. It's already happening in various parts around the world. China, you guys have seen tons of Chinese robotics videos. They've already began innovating like crazy on that. So I think that's a massive, massive market opportunity. And I think it's up to Tesla to win. I think Figure is going to win there. I think Apptronic's going to be there. And I think Tesla's going to be there. So now, granted, is 5 years enough? Look, I know Elon's super ambitious, but I do think in the next 2 years, Optimus should be up and running. And then hopefully 3 years after that, it's scaling. Because I think Figure is going to be there in 5 years. Apptronic, I don't know if they're there in 5 years, but now that Google invested, they've supercharged with the DeepMind brain coming from Google. So I think next 5 years should be pretty exciting for Tesla and NVIDIA themselves. Cool. It's been a fun week. It's been a fun week. It's been a crazy week. It's been an emotional week. It's been an exciting week. 6-figure down days, 6-figure up days. I mean, just absolutely wild on a week like this. But overall, we're green for the week. Overall, we're green for the week. I do have to get some Texas barbecue, dude. It's been a while since I've had some really good Texas barbecue. Like, it's been a minute since I've had some good Texas barbecue. And I see it all the time in like the YouTube shorts and the videos. And so definitely we'll have to do that. Webull still up 12% here after hours. I'm going to go through their financials over the weekend and try to see if there's anything promising there. I'm not like opposed to buying Webull at all, just because I like Robinhood. Last time I went through their S1, I didn't like the valuation. And then, it is a Chinese company as well. That would also probably get me to be a little hesitant to buy this one, even though I literally use the product every day. But by the way, I've heard from a little birdie, Robinhood's making some updates on Legend. And I think when those updates go live, we can make the switch from Webull to Legend. I've been meaning to do it for a while. I literally told Vlad to his face, I'm ready, but you got to get me a couple of core things that you guys don't have ready yet. And so as I think those changes are implemented, which probably are very soon, we're going to make the switch. We'll be able to use Legend every day. So yeah, it'll be pretty fun as this entire week has been. Again, we're still green after hours. Sunday futures, we'll see how this ends up turning out. But so far, the smallest of minuscule pivots that the White House could end up putting out. It's not even a pivot, you could call it. It's just like a headline that, hey, we have some trade offers on the table. That's all the market needed. That's it. That's all the market needed. That is literally all the market needed. Who actually trades on Webull or like puts real? It's not a $200 million market cap. That's wrong. It's $6 billion. It's not 200 million. That's a mistake by some of the brokerages. Who actually like uses? Because a lot of people do use Webull. Like I see screenshots all the time. Like people, not only do they love their charts, but like people do actively trade on Webull. So I would imagine a ton of you use it, at least to an extent. I just think the growth prospects and the overall core business is like night and day when it comes to Hood. And so that's why it's a little bit more exciting. Tyler says my sold $30 put on Hood's looking good. Yeah, I mean, when it got to what, 34, 35, those $30 puts were cranked up in terms of premiums. If you sold those, they're looking good right now as Robinhood was up 8% on the day, which is really the best time. And if you had to buy it at 30, would you hate that? That's the whole beauty of selling puts, right? This is why I love the concept of selling options so much. And I want to keep learning about the intricacies of this particular derivative strategy, which is that there's a way in which you could be wrong on the direction of where you think the stock is going up or down, but still not technically lose. If you are conservative and you play it the right way, and there's going to be some moments where you feel like you're losing on the trade, but if it's on the right company, you're kind of not losing. There's ways to manufacture being able to generate some premium, even if you've lost on the exact direction. Like it's just so much, in my opinion, more of a winning strategy than buying options, even though buying options obviously have a way better risk to reward, given they can go vertical. But yeah, selling some puts this week have not done too bad. Yeah, a bunch of you guys say in the chat that you use Webull, so it's fair. Yahoo Finance, yeah, dude. You know, Yahoo Finance is one of the most visited websites on the planet, or should I say Yahoo in general? And Japan is what accounts for a lot of that traffic. Like they got first mover advantage in Japan a while ago. I mean, look at Yahoo, bro. So I showed you guys ChatGPT gets 4.5 billion visits a month. Yahoo, we're talking about Yahoo gets 3.19 billion visits a month. I mean, that's a billion less than Chat freaking GPT. So Yahoo Finance, Yahoo still has a bunch of media, Yahoo Mail. I mean, there's so many verticals to this one. It's kind of sad what happened with them, bro. They had a chance. No, they tried to buy Facebook for $1 billion, and Zuck said, screw you guys. Even though Peter Thiel was telling him to seriously think about it. Peter Thiel was like, hey, it's been a couple of years. They want to give us $1 billion. And Zuck was like, well, what am I going to do with the money? I'm just going to be bored. And so Zuck was like, no, and now Facebook's $2 trillion, right? So that didn't work out. And then Melissa Mayer took over. And I think I might be getting this wrong. I think they had a chance to buy Netflix. Yeah. So they had a chance to buy Netflix. They ended up buying, does anyone know what they ended up buying? Instead of Netflix, they had a chance to buy freaking Netflix, dude. So did Blockbuster, but they rejected Netflix. Oh, Yahoo Sports Fantasy. Yep, there's another one. So many verticals. They ended up buying Tumblr. Do you guys remember Tumblr? I used to be on Tumblr. That was back in the day, bro. It was a blogging website. They ended up buying Tumblr. That didn't work out. And then I think 10 years ago, they sold themselves to Verizon. And then I think Verizon sold them to Apollo because Verizon couldn't make any money off Yahoo. So it was one of those tech companies in the dot-com bubble that didn't they buy freaking Cuban's company as well for $5.6 billion at the like literal top of the bubble? So like that was a bad acquisition. They couldn't get Facebook. They missed Netflix. They bought Tumblr. And then they got bought by Verizon, and then they just got sold to a private equity firm. So we didn't end up seeing too much momentum in the context of Yahoo. Cool. So yeah, that's what we got. That's what we got in the context of of what happened where to Yahoo. Yeah, Cuban's company was bought with it. Correct. Cuban's company. Yeah. Why are you guys saying rip Joe Rogan? He's not like Joe Rogan. Like, if you're trolling about that, that's not a cool thing to troll about, bro. Unless you got some random article that says, yeah, Joe Rogan did not die, dude. Why are people saying rest in peace, Rogan? That's weird, bro. Like, the dude is not dead. And that's just a weird thing to joke about. But yeah, Joe Rogan is, from my understanding, is not passed away. So I was watching Joe Rogan last night, as I told you guys about this morning. You know, the funny thing about Cuban buying Yahoo is he played it really well, or Cuban's company getting bought by Yahoo. He talked about how he hedged his Yahoo stock because he got a ton of Yahoo stock. This is a great clip right here in terms of how he pulled this off. So I'll just let him explain it right here.
Company that was broadcasting on the internet,
right?
Television stuff,
audio and video. So all the streaming, everything YouTube does.
Yeah.
We started that.
You started that.
It was called AudioNet, and we started in 1995.
And when Yahoo bought you,
right,
they gave you $2.5 billion.
No, they gave us $5.7 billion in stock.
Right.
And then so I got 33% of it or whatever.
Right.
And then
when Yahoo went to about $2.5 billion, you sold everything.
When it went up, I did a hedge, right? They called it one of the top 10 trades all time on Wall Street.
This actually is really cool, bro. What he did to navigate the .com bubble after getting one of the biggest buyouts ever at the top, it's pretty damn impressive.
What did you do?
So I got all this stock from Yahoo. And everybody else thought the internet bubble was going to keep on going forever, right? I'm like, there's no way. So I sold calls, bought puts, so I protected my stock. And so it went up in value some more and went up to where my hedge was and then cashed me out.
I see.
And then the whole market cratered and I was protected.
When you cashed out, Yahoo went up a little bit more, and people said to you, "Oh, aren't you sorry?
Well, exactly
Why
right.
didn't you hold on to it?" And you said, "I've got $2.5 billion.
Well, how much do you need, right? That's exactly.
And you didn't get greedy. I mean, you could have kept saying, "I'll stay in another day. I'll stay in another week." And if you had waited just a couple of weeks,
probably about 6 weeks, I would have been fucked.
Like, how badly fucked? You might have lost $1 billion.
Oh, more than that.
More.
Oh yeah. No, Yahoo went from like $300 to like $5.
Dude, that's crazy. Like, talk about timing, bro. You can disagree with Cuban politically, but talk about the timing on recognizing a bubble and then protecting everything through that bubble and still walking away with about $2 billion in cash.
From what to what?
Like 300 to 5.
Wow, in a matter of weeks.
Yeah, probably over the course of a year, but it would have been impossible to really get out.
Right. And so some of the guys that were in business with you all got stock as well.
Yep.
Did some of them stay in too long and get tanked?
Yeah, I mean, I went to everybody that owned stock in the company. I said, do this.
Get out. I'm getting
Just
out
protect
now.
yourself, right? Protect yourself, right? And some of them did, but a lot of them didn't.
Wow.
They just got caught up, and there's some miserable friends that I have. And employees, like the guys who put in, I was just talking to my partner, Todd Wagner, just the other day, actually. The guys who put in $30,000 ended up with $30 million.
Wow.
And some of our employees who were there right at the beginning that we didn't have a lot of money, we gave them stock, 15, 20, 25 million, and a chunk of them just lost it all.
Oh, wow. That's a shame.
They were $20 million one day.
And
that's it.
nothing.
It's your ticket to freedom.
Nothing.
And then zero.
Nothing. You're searching for a job.
Ticket away.
Wow.
Yeah.
And you begged these guys. You said, look, even you were the major stockholder, right?
Yeah, I was the largest stockholder by far.
Yeah. You hit $2.5 billion, and you said, hey, if I stay in, maybe I'll have $5 billion.
No, yeah. And I told these guys, come on now, seriously?
After the $2.5 billion, after buying the Mavericks, after blah, 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 what are you worth today now?
Probably more than 3 because I've made some good investments.
Wow.
Yeah.
And he just flipped the Mavericks for a decent chunk of money. I think he bought it at $200 million. I think his stake was a couple billion that he sold 75% of it the last year. Or it was, the end of last year. So, people can call it luck. They can call it skill. But the point is he got the hell out after realizing there was a .com bubble. 300 to 5 over a year is crazy, dude. And he protected himself with options, with derivatives, right? Selling calls, buying puts, and being able to navigate a $5 billion exit. Because, I mean, theoretically, the reason Yahoo was able to pay $5 billion for a website that ended up not becoming that relevant to the overall development of the internet was because it was all stock. It was free money because they were getting so much liquidity from the .com bubble that they could issue as much stock as possible. People would buy it at whatever valuation. They could buy all these different internet companies and just conglomerate themselves into trying to justify the valuation. When the bubble pops, who's holding the bag? This is what we talked about last week, like the stock market kind of being a Ponzi, right? Like whoever's buying, someone's selling it to you. It's musical chairs. Who gets out? And Cuban ended up finding a way to get out. So not too bad. Someone asked right here in the chat, I think this is a good last question to end it on for today. Year-to-date updates for everybody, and then weekly updates, either in percentage, dollar amount, whatever you want to do. We can put that in the chat and see how everyone is doing right now. I'll go first. My year-to-date is now negative 10.75%. I think at one point this week, it was like 30, 35 negative. So a little bit of decent recovery. And then weeklies is up 6 figures, about 109 grand. Today was up 27 grand. So 27 out of that 109 came today. So I think probably a lot of us are still negative, but it's just not as negative as it was on Tuesday night. Okay, we got Dutch down 15%, Todd still down 15, Walter 33, Zeke 42, Chicago negative 23, Tyler only down 4, Rick down 12, Trey down 11. Yes, basically a lot of negative 10s to 20s is what I'm seeing the average on, which probably would have been 20 to 40s if the markets didn't have any sort of recovery this week. Yeah, everyone's still negative. There's a couple of you guys that are green. Noah's green. Randy's green. I'd say like 95% of us are still negative. Let's see, bro. I mean, a couple days ago, it was like it's a preservation of capital year, not a capital accumulation year. What if it ends up being a capital accumulation year because we're not in an environment where we only have to worry about preserving our capital? On a day like this, it feels like that's possible, but then Monday, you never know what could happen. But again, my takeaway from today is the fact that the market flipped that quickly. I mean, it was really instantaneous today off of what really isn't even a headline, which is just that, yeah, we've got some more deals. I mean, it's either manipulation, it's either crazy algos, but it's a Friday, so I would tend to think it would go the opposite direction. It feels like the market wants to go higher for a lot of different reasons, but they're just scared about this tariff thing. And if we can hopefully get that to subside, we don't have to have a crazy 25% year, but maybe 10% for the year is not crazy. And if that happens, I think a lot of people will be up a lot more than 10% for the year. Ray said I stopped looking at my brokerage account. Okay, cool. That's probably the smartest strategy we had right here. Ori, thank you for the super chat. Is it possible that the University of Michigan Consumer Sentiment Index is politically biased? Yes, I think that is possible. That is a critique I talked about in the morning that I haven't gone super deep into understanding the critique, but one of the common critiques of a lot of these surveys, not just Michigan, is that they choose to interview certain people at certain moments that will be biased to oblige in a certain way because of their political affiliation. So the surveys are soft data. They're never hard data, right? And we've been hearing a lot about soft versus hard. Hard data is CPI and PPI. Soft data is like what some random group in Michigan or Los Angeles thinks, or Kentucky, about inflation. It's like, yeah, like that matters, but that's not actually where did gas prices go down this quarter? Did shelter come? Like that's the real data that the market will move on. So definitely could be politically biased, but again, the market reacted to it for like 5 minutes today and then it moved on. Like it's a lot of these things are just to get a little bit of a gauge, but it's not really as market moving as we tend to think. Ruda, thank you for the super chat. Yahoo Finance is the best free portfolio tracker. You can link all the brokers and everything. Graphs are clean and navigation is flawless. This is true. My uncle is linked with all of his Indian brokerages to Yahoo Finance. That's probably another reason they get so many visits per month. And so when he checks his portfolio, he goes to Yahoo Finance versus his actual brokerage. So that gets them a lot of momentum as well. Realistically, where would you like SPY to be by the end of the year? I mean, dude, if we get a China deal and Trump walks his tariff stuff back and earnings are strong, is 64 to 65 crazy? Because I think when we get the China deal, again, I'm saying this in a vacuum, but I think we can get back to 6,000 if earnings are good and inflation keeps coming down, because then we're going to get cuts and there is a way to get back to 6,000 without that much pain. Definitely back to that 570 level, which was important. And then from there, things have to go really good. So like discounting all of that back, maybe a better target is like 6,100. But if we're not out of the woods and shit hits the fan again and something breaks and there's a credit crisis, I mean, like, yeah, 6,000 is a dream at this point. But if things go in the way that they have a chance to go, I think we can get back there. Michael says I'm up 40% all in Celsius. Is that true? Are you actually all in Celsius, Michael? Are you trolling? Because that would be incredible. Celsius, 2% green on the day as well. I've been fooled so many times by this. The market pattern that the markets are in right now, always thinking that it will go to only higher, only for it to fall lower. I'm very skeptical. Yeah, I think it's fair to be skeptical. I think there's a healthy level of skepticism that everyone should have, especially literally given what we've seen this week. But I also, the stance I had as soon as this tariff volatility started, it's the same stance. I don't think selling this market is making the most sense with a lot of the macro variables in the right direction and the one variable in the worst direction, which is tariffs. But if that's only one thing we got to switch, again, that doesn't mean it has to pump 20% this year, but it also means it doesn't have to be one of those years where we see negative 20% either. So, yeah, from that perspective, I think everyone's still skeptical, but people are ready to move if they get the data that shows that things are potentially coming in the right direction. June says, I just want to go back to last year's economy. Well, that's not happening because we got new tariffs. That's a whole different free trade paradigm. And then we've got, what was I going to say? We've got tariffs and then, government spending is getting cut, right? So you got less government spending, you got tariffs, and then you just got governance by tweet. So like this is a totally different economy. But I still think it's an economy that can do well by the end of the year. All right, cool. I think that is it for me today. 90 minutes, relatively short stream, given the 4-hour streams we had in the market close for the past week. But I hope everyone has had a great week. Very happy we had green to end out the week. It's nice to just feel a little bit of reprieve from everything that we experienced this week. Palantir Weekly will be happening today, 11 p.m. We'll have Amir, Arnie, and Matt on the show again. So we'll be exciting to discuss everything Palantir, and we will keep going through it. I think earnings for Palantir is going to be May. I think some of the brokers say May 5th. We don't have the official date yet, but it'll be in that first or second week of May. So it might even be the last week of April, but no, it's going to be May. Last time we did it in May as well. Yeah. It'll probably be first or second week of May. So I've said my opinion many times. I think Palantir is going to crush it. I think they're really going to crush it. I think the deal is going to be amazing. I genuinely think they are growing like crazy, and there hasn't been a lot of buzz because they don't put out all the press releases and all that stuff. And at the end of the day, the stock has been relatively flat, even though it's holding this multiple, which I'm very happy it's been able to hold this multiple. So you're not seeing them in the news like crazy. Karp's not doing all these different interviews and stuff, but I think they're working. I think they're getting shit done. And if there's any update on the Doge stuff, which we've seen tons and tons of articles of software modernization that the Doge team is thinking of doing this week, Trump said every federal agency needs a chief AI officer, which sounds like Palantir to me as well. Then those updates obviously can be very important. The Palantir date is not confirmed. Eventually we'll get it probably next week, or at least in the next couple weeks, but should be in mid-May. All right, cool. Thank you, everybody. Have a good one. Appreciate you all. If I don't see you on Palantir Weekly, enjoy the weekend. We'll be back Sunday night for the futures, and we'll keep going from there. That's it. Thank you, everybody. Love you all. Have a good one. See you guys on Palantir Weekly, and if not, see you on the Sunday futures. Bye, everyone.